We're back on the air. My name is Jeffrey Davis, and this is Radio Entrepreneurs. And our next guest is a guest who has visited us before on Radio Entrepreneurs. It's Martin Paley from Paradigm Partners. Welcome.
Thank you. Nice to be here.
Well, Martin, what's our topic for today?
Well, we're going to talk about tax recovery for the hospitality industry, which would include restaurants, hotels, and for-profit nursing care facilities.
So tell us about it. I'm a big fan of tax recovery. I've seen what it's been able to do for some of my clients, and I think people are skeptical about it. They don't believe it's reality. Do you find that?
I do. Sometimes when people think it's too good to be true, they tend to back off, but it is true.
So what is tax recovery? If you want to just give the listeners a background as to what tax recovery is, what's an example of the services you would provide?
Well, the IRS, as you know, has various programs that are available to taxpayers. We're talking about companies now that can lower their taxes. As an example, for the restaurant industry, there's what they call the worker opportunity tax credit. When they hire a person that falls within 11 different categories, they could get up to $9,600 back from the federal government for hiring that person.
Yeah.
That's a good thing.
It's a great thing, yeah.
So that's one example, and there are many more.
And the statute, is that typical 3-year statute that you're adhering to for those that if they didn't claim it?
No, actually, that's you have a 28-day window.
28 days, wow.
From the date of hire.
Okay.
And so that's why it's a time-sensitive thing, and one of the reasons we've been so successful is we have a system down that we can qualify a worker in less than 5 minutes.
Oh, that's great.
And apply it to the federal and state.
Now, there is a application of what you do in the restaurant industry and all these sort of services industries. Can we go into that a little bit?
Right. Well, that would be one of them, the worker opportunity credit. The other one is something called cost segregation. Mm-hmm. And cost segregation is the way to rapidly depreciate the interior of a building as opposed to the exterior. The IRS, as you know, has schedules of the various components of a building, the lighting, the heating, the plumbing, and they're by year. And so what we end up doing with engineers on staff is to go through a building literally on paper and schedule out all of the various components, come up with a big report, and that gets filed with the corporate tax return, and it lowers their tax liability.
Yeah, that's great. And given what we're talking about with Section 179 and bonus depreciation, I think cost segs are becoming super powerful, and I think clients that don't know about it
Okay, what are you
should know about
talking
it.
about? 179. You guys are now talking like to each other, but not to
Accelerated
our
deductions.
audience.
Right.
You're talking about accelerating deductions?
That's right.
Okay,
And
you have to
so-
dumb it down for the rest of us, Kelly.
Okay, sorry about that. Go ahead, Marty. Why don't you tell us about that a little bit?
Well, essentially, what it does is it's the ability to rapidly depreciate the building's contents. And pretty much, and again, every case is different, but pretty much the walls, the plumbing, the electrical, all of the various components of the building that are nailed down,
Right.
Other than, they say, fixtures, furnishings, fixtures, and equipment, can be depreciated in a more rapid fashion.
Right. So what you're looking at is taking something that was potentially 39 years and bringing it into a 5 or 7 year category. So
Right.
you could initially think that you have to depreciate over 39 years, and after a cost seg, you could depreciate over 5 or 7 and significantly reduce your taxable income.
That's correct.
So the services you provide are extremely powerful.
Right. And one of the other things that we do to add value is we have engineers on staff at our company, and literally go through as an engineering project and produce a much more detailed and more effective report. Many of our competitors don't do that, and so it's more of a wild guess, but ours is much more precise.
Martin, if somebody wants to, and I can't see why they wouldn't talk to you at all, I mean, everyone should be talking to you and finding out if they're eligible for tax credits, and if they did, how would they contact you?
Well, I have a phone number, 617-828-4440, and I can be contacted by email, mpaley, that's M-P-A-L-E-Y, @paradigmlp.com.